Good morning, everybody. Welcome back to another episode of The Market Open. It is Wednesday, July 31st, 8:47 a.m. Yes, I am 2 minutes late, but we are here. We are live. We've got so much to talk about. We've got so much to dissect, discuss, interact with, different pieces of information. We got more jobs data today. We're going to talk about that. We have some guests joining us on the show. We're actually going to have two guests today on The Market Open. Okay, we're good. We're back. We're back. We should be good. Yes, microphone. We're good. We're getting to the point where the Market Open is going to have some multiple guests throughout the show. So hopefully we start to amp up the guest schedule. But we're going to have multiple guests. We're going to have one guest at 9 o'clock to discuss Microsoft earnings, and then Jose will be back at 9:45 to discuss AMD. Lena says, "Don't ignore the fact that you're late, sir." I'm like, yeah, I'm late, but like we have all this stuff to talk about. It's like, no, you can't ignore the fact that you're late. Okay, so we've got a lot to get into. We've got so much to talk about. A lot of stuff happened yesterday. Obviously, Microsoft, AMD happened. We had something very interesting in Microsoft earnings happen. Microsoft fell 10%. We thought the world was crashing. Then things came back. Nvidia's up 7% right now in the freaking pre-markets. AMD absolutely crushed it. We've got Meta after the bell, Qualcomm, ARM. We had a bunch of earnings this morning already with T-Mobile, MasterCard, etc. So there's a lot to discuss, a lot to get into, a lot to analyze. However, I have two things to say before we get started. Okay, microphone's good. Two things. So, number one, I think I'm getting too obsessed with the stock market. I had a dream. I was in Applebee's, which is a fine American establishment for burgers and pasta. If you don't know what Applebee's is and you're around the world, I was in Applebee's. I've been to Applebee's many times in my life. I'm in Applebee's in this dream. Not only do I set up the laptop at the bar at Applebee's to do the Market Open. Like, I'm not kidding. I set it up. I'm like adjusting the mic. The waiter's like, "What do you?" I'm like, "Oh, I'm about to do the Market Open from Applebee's for God knows what reason." Then guess who walks into the bar? Tom freaking Lee. I woke up from the dream like, what the fuck just happened? And then Tom Lee is like, "Dude, I love you. Let's take a selfie." His hair is awesome. And we're like taking a selfie at the bar. Then Tom Lee ends up giving a speech to like the 100 people that are in the restaurant. So the Market Open ends early. And then Tom Lee's just giving a speech. I don't know what the hell he's talking about, but he's giving a speech. And then I'm just watching him give the speech. He like takes the mic that the waiter gave him and he's giving a speech. It was absolutely insane. I woke up and I was like, did I just meet Tom Lee? And I was like, no, you just woke up from a dream. That didn't happen. Okay. So that was the first thing that I want to say. That was just the craziest thing last night. I woke up at 4:30 a.m. and I'm like, what is going on, dude? Like, why am I thinking of Mr. Tom Lee when I'm sleeping, dude? I should be dreaming about anything other than this stuff, but that happened. Number two, and the more important announcement, I've officially quit drinking caramel lattes. I am done, and I wanted to show this live on stream. This is actually why I was late. I was finishing creating this. Here you go, folks. I'm a protein shake guy. So this is peanut butter, banana, almonds, chickpeas, kind of natural made protein, not really using protein powder yet, and milk. So I drank one of these yesterday. It filled me up for like 8 hours. It was great. About 450 calories. I'm about to drink it live. And yeah, this is no more caramel lattes for your boy. Look, it's not horrible. It's not bad. It's not like I wouldn't love a caramel latte right now because goodness gracious, a caramel latte in the morning before the Market Open is like, it's become a routine for 6 months, but I'm done with the caramel lattes. I'm growing up. I'm becoming, an actual adult. And so, yeah, we're doing protein shakes now. So those are the two announcements I wanted to make. Officially moving on from caramel lattes, and Tom Lee for some reason is showing up in my dream. All right, so we got 9 minutes until we have a special guest join us to discuss Microsoft earnings. So before we get into Microsoft earnings and all that good stuff, I think we'll start off with something that happened yesterday that was very, very good news for Palantir shareholders as well. And I thought this was really important. Amit, you must lift weights after that drink. You guys will be happy. I'm gonna prove it right now. I'm not even gonna waste any time. I have started to lift weights. I've started an entire new routine with lifting weights. Here's my strength training. See, I'm gonna prove it. I'm not even bullshitting you. Look at this. We got bicep curls. We got overhead triceps. We got bent over reverse lifting of the weights, tricep kickbacks. We got all shoulder presses. We're doing all this stuff every single day, about 45 minutes a day. And we're running a good 4 to 5 miles a day. I want to get that to 7 to 8 miles. So we are bulking up. We're losing the weight and we're stopping the sugar. And we're going into 2025, hopefully a lot healthier. All right, so this is what happened yesterday in the context of Palantir. If you missed it, you're going to be pretty excited to see it. Here was Satya Nadella talking about a company we all know on the earnings call, and this was my reaction to when he talked about us.
The number of paid models as a service customers more than doubled quarter over quarter, and we are seeing increased usage by leaders in every industry from Adobe and Bridgestone to Novo Nordisk and Palantir. Now on to data. Our Microsoft Intelligent Data Platform provides customers with the broadest capabilities spanning databases, analytics, business intelligence, and governance, along with seamless.
Okay, so obviously that my face right there has been memed many times, but the point is, dude, he mentioned Microsoft, and I thought about this a lot. I tried to understand, hey, is this like an overreaction, or is this kind of a big deal? Like, what is going on here? And I have a couple points of analysis that kind of is important when we think about this. So first of all, the exact quote was, the number of paid models and service customers more than doubled quarter over quarter, and we were seeing increased usage by leaders in every industry from Adobe and Bridgestone to Novo Nordisk and Palantir. Now, he mentioned 4 companies in that opening statement. This opening statement was pre-scripted. It was not an opening statement that was, he didn't just make it up on the spot. He was reading off of something. And so the Microsoft team, whether it was Satya himself or his speechwriters, whatever it is, they came together and decided, hey, we are going to script this statement and we are going to purposefully include certain companies that we want to name in this statement. And Palantir ended up making that list. Now, here's the question. Why did Palantir make that list? Is it because he likes Alex Karp? Is it because Palantir is just a cool company? Like, what's the reason? I think there's a variety of reasons. The first one is, I think Satya is trying to position himself with the leaders of technology. We see what he's doing with Sam Altman. We see what he's doing with Jensen Huang. Sachin made this point on Twitter last night that he's trying to be part of, the tech revolution. Microsoft, obviously one of the leaders in the AI revolution. And if Palantir you think is a perceptual leader in your industry, then it's going to be really important to potentially mention them. Notice he doesn't mention Snowflake or Databricks, right? He mentions Palantir for a reason. Again, I'm not saying it's the biggest deal in the world. I just think these are moments to appreciate in the journey of a company that's worth less than 100 billion. Because one day, if it's worth 500 billion, these are the days where you're going to realize, I was potentially on the right track of my investment thesis because I was getting confirmation by a $3 trillion CEO about how valuable Palantir potentially is. Now, in terms of the technical reasons why I believe he mentioned Palantir, there's kind of 2 core reasons that we're going to get into. So number one is that Foundry and AIP are using LLMs within the enterprise to deploy models that act as AI infrastructure for BI, business intelligence. Now, many of the requests to those models can go to Gemini, Claude, etc., but a lot of them go to GPT. Why? Because GPT is, I would argue the best model that is out there. ChatGPT, like I still use it every day, and I would imagine businesses are using it. So given Microsoft owns 50% of OpenAI, aka 50% of GPT, Palantir deploying GPT into the enterprise is super bullish for the acceleration of OpenAI and Microsoft. When customers that are using Foundry and AIP are making requests to GPT as the model that's powering a lot of their infrastructure, there you go. That's bullish for Microsoft. Number 2, Microsoft's Azure AI Cloud, which we're going to talk about in a second because that caused the massive panic that it did yesterday after hours, is probably seeing an uptick because of companies like Palantir that are cloud agnostic, meaning they can work with Azure, GCP, AWS, Oracle, it doesn't matter, but they're bringing more AI workloads from their clients that are using Foundry and AIP onto Azure. So it seems like Microsoft is realizing that Palantir is becoming a leader in the broader SaaS space for AI because of the growth in Azure that Palantir is contributing to and the growth of GPT requests that AIP is contributing to. Bullish for Microsoft. So at the end of the day, I think that's a really nice thing for them to say. It makes a lot of sense. It puts Alex Karp in a pretty esteemed echelon of CEOs that are being mentioned by Satya Nadella. He's not just mentioning CEOs for the hell of it. And so I think that is something we should at least care about in the context of what Satya said. Now, Palantir dipped to 2584 last night on Microsoft's collapse. We'll talk about that more in a second. Right now, it's at 2676 in the pre-markets, up 1.55%. The rest of the market, folks, is also up. The NASDAQ, which was down 1% after hours, that's a big deal. It's up 2%. It's basically eliminating all of the gains, all of the losses that it had yesterday during the trading day and after hours, as it's up 2%. We've got the S&P 500 is up 1.27%. I mean, again, a 1% swing on the S&P or the NASDAQ is a big swing, right? These are major indices. And so 1% in a stock is whatever. In an index, it really matters. they're going up 1 or 2% in the pre-markets. And there's some reason for that. There's some data behind that. We're going to get into macro in about 20 minutes and really discuss all the data that we're seeing. A lot of that data is pointing to that inevitable rate cut. But these companies are doing okay. Wingstop is up about 4%. MasterCard up 3%. We'll go over their earnings in a second. KKR, they had earnings. They're up 3%. ADP, they're up 3.79%. Even Boeing, which missed on EPS and revenue. We knew that would happen because Boeing has been through some troubles. Boeing is up 1.63%. Because obviously they got hit pretty badly over the past year or over the past 6 months, going down 30%. PayPal is holding its gains up 1.17%. SoFi in the pre-market is also up about 1% at 748. So we're seeing a pretty nice pre-market before we get into JPOW, who's going to be talking in a few hours at 2:30. I'll be live at 2:25 covering that. Likely we'll get a pause, not a cut or a raise. But given the data we got this morning that we'll get into in a second, it does seem like he is going to be very dovish, and that dovishness will probably result in the inevitable rate cut. Okay, cool. Let's bring on a guest to the show. First time guest, but he's been part of the Twitter community, YouTube community, friend of mine as well. And he's going to discuss a bit more about Microsoft, SaaS, ServiceNow, everything we're seeing in the broader cloud CapEx structure or infrastructure spend that we have going on along with CrowdStrike. Let's bring on Sam.
What's going on, man? How you doing?
I am doing very well. Do you want to introduce yourself real quick to the audience, and then I'll get into my deep questions that I have?
Yeah, sure. I'm Sam. I work in the cloud industry. Been in the cloud industry for about 15 years. Right now, DevOps engineer, or I don't know, something engineer, because there's really a lot of ways that people can call the work that I do. But for the most part, I've really been investing for about 15 years, really going hardcore with investing for about 5 years, traded futures, options, different types of instruments in the market. But lately, just been really focusing on what I know, and that really is SaaS stocks.
Okay, I love it. And how long have you been an engineer working with cloud?
Yeah, about like 15 years now. I've been working with AWS pretty much since they started.
I love it. Okay, so give me your raw take, man. Microsoft, it tanks to 390 as soon as they report the numbers, and then it rebounds to 408 after Amy Hood, which is one of the most exceptional CFOs of all time, basically calms down the market. Why do you think it tanked, and do you think the rebound makes sense as well?
So I think it tanked because they one of their margins compressed. It compressed by about 1%, which isn't really a big deal. But the thing is that it's going the other direction. I actually got a chart that I want to share. You mind if I share my screen?
Yes, go for it. 100%.
All right. Share screen.
Someone says, what is SaaS? It's software as a service.
Yeah, it's basically software as a service. It's like more like the shift left model. So instead of hosting all the software on-prem, you're hosting on someone else's service and you're paying them to do that. So let's see here. All right. So over here, I basically got a chart of the percent of change or growth for the different segments in Microsoft. And if you look over here in the intelligent cloud actually is kind of slowing down, but not slowing down a little bit. It's starting to slow down pretty materially, considering that it's been increasing almost every single quarter since June 2023. And that's really what was building the momentum in the stock. The fact that, cloud was expanding, cloud was growing. But in this last quarter, you see here, it dropped like about 2%. And that just worries Wall Street. Like basically coming into this earnings, Microsoft was pretty historically overvalued. It was like in the 460s, like a few weeks ago, everything was really up there. And then it's all like people are starting to get worried about the sentiment. Like this sentiment is kind of changing around. People are getting hyped up about AI stocks. Just started like 3 weeks ago. Tides are kind of turning. People are keeping the ear to the ground. Like, wait, hold on. Let's see the revenue on the AI stocks. And, it's really any reason to sell the stock when you think about it, right? Like the stock market oscillates, goes up and down. If you look in this chart that I got over here, I kind of highlighted where the historical mean trading value that Microsoft trades at. It's really like around the high 20s forward PE. And after this earnings, well, I don't know, when those are the 390s yesterday, I know a few of you guys were sniping that stuff, but like you were saying, as soon as Amy came in the call and everyone was worried, like, oh, they're spending so much on AI. But then when Satya and Amy started saying, like, it's not just AI that we're spending money on. We're spending money on the cloud expanding,
Right.
right? Because 30% growth or 29% growth in Azure is no joke. Like that's not like this is a $3 trillion company, and they have 30% growth in one of their biggest, fastest growing sectors in their company. And then you see AWS growing big, you see Google GCP growing big. You know, like that's a pretty big freaking deal, right? Like it's not just AI. Like people still use the cloud.
And one of the things that was crazy about this is the street wanted 36.84 billion. Microsoft puts up 36.8 billion. So they go down from 30% to 29%. On constant currency, it's actually 30%. So the thing tanks, you know, dramatically just based off that small miss. Are you saying that because it's kind of priced for perfection and given the nature of the market, any small little miss on Meta or Amazon or Apple as well will lead to the same decline?
I 100% agree in that. Like that's just how the market works, right? Like it only gets so overvalued to a certain point that like any reason to sell, like we're selling right now, right? Like it can't sustain that overvalued percentage, especially when the market's imbalanced. Like as Chris was saying, you know, many times, you know, you have the RSP and you have the IWM. Like the market really needs to kind of balance out. It needs to broaden out. As a lot of people say in CNBC, it needs to broaden out, which is true. You can't concentrate all of the earnings growth as well as all the money in 7 stocks in the market. And I don't mean to be like one of those preachers in CNBC where it's like, oh, this is ridiculous, the Mag 7. Like I was long the Mag 7 for the longest time, but you know what? Now it's time to spread a little love to everyone else. But keep pumping Palantir because that was pretty funny when that came on.
What are your thoughts on IWM then? If you think we need to broaden the rally, are you in the Tom Lee camp or no?
I'm in the Tom Lee camp, man. I'm not gonna lie. I'm in the Tom Lee camp. I'm a little degenerate on TNA calls, but you know, not to the point where it's like going to hurt the bank if it doesn't make it. But I strongly do believe that the market will broaden out and the market's already kind of getting ahead of it, right? They always sniff this shit out ahead of time. And these small cap companies, when you decrease, okay, like for example, this morning, NCLH, Norwegian Cruise Lines reported earnings this morning. All right.
They crushed. Yep.
They crushed it. They beat and they raised guidance. Margins expanded. Cruise lines are high in demand. People are booking pre-sale tickets ahead of time. Like you got to book a cruise like a year or two out in order to get on there. And it's really funny because on the Patreon Discord, there's a lot of people like posting videos and stuff and like talking about how they're going and like Carnival and stuff. It's like that is the true DD. Like when you go on a cruise, that is true due diligence. With the cocktail.
Yeah. And these companies will benefit in a low interest rate environment. That's correct.
Yeah, no, they for sure will, man.
So, okay, a couple more questions. Give me your thoughts on Meta and Amazon. Let's do Meta today. What do you think is going to happen with Meta?
So Meta has some ridiculous free cash flow. All right. Like, and I would say out of all the Mag 7, Meta is probably one of the cheapest ones in terms of their historical PE. They're trading around in mid-20s, I believe, in terms of forward PE. I mean, this is a company that's printing so much damn money, like more than the Fed right now, probably. But like, this is a really good company. They just released Llama 3.1 less than a week ago. I mean, Zuck is just like killing it out there with the interviews and the social media public appearances. But I mean, their advertising is insane. Right? You saw Google, their advertising was still doing good. Even Microsoft is doing good with their advertising, especially in LinkedIn. Like, this is probably a really bullish company. It's got the AI play in terms of providing an open source LLM to a lot of developers around the world. They got advertising, right? And then they're expanding into, I mean, I don't know. I think the metaverse will really come into fruition, but it's a little too soon to do.
Okay, I disagree. I think metaverse is bullshit. I think metaverse is bullshit, but it's okay.
How do you know we're on the metaverse right now, man? It's the Matrix.
If this is Zuck's metaverse,
this is the metaverse. Well, I mean, Tom Lee's in it, so like that's what matters, right?
Yeah, I think Meta will be interesting, and if their capex goes up and they fall really quickly, maybe that is a buy the dip at 390 on Microsoft, like we saw yesterday. Last question for you, Sam. Thank you for joining in. Sam's Twitter, putting it in the chat, so please make sure everyone to give him a follow. CrowdStrike, so down 10% now for the year. Are you dipping in your toes at all?
No.
Okay, why?
No. Okay, so I was buying CrowdStrike when they were trading at like a low 10s EV/NTM revenue. And that's a metric they use to compare different SaaS stocks or cloud stocks. And they got to like over 22 times, like just a month ago, right? I was trimming. I think I sold like 85% of my position when it got like near the 400s. And I sold the rest of it last Friday. This isn't we haven't seen anything yet play out in the fundamentals for CrowdStrike at all. Like if you take you had the bad news coverage, right? And then Delta comes out and they want to sue CrowdStrike. And I mean, don't get me wrong, like $10 in Uber gift cards to millions of people is a lot of money, but like really, like that's what you're gonna do? Just $10 in Uber gift cards? Like, but you can't even buy a freaking shake with $10. That's why you're making shakes at home, because it just doesn't cover it, right?
That's true.
And
No, that's right. That's
by the
right.
way, protein shakes, baby.
Protein shakes. It's the way. I'm done with caramel. Dude, I miss my caramel latte so much, but it's okay.
Yeah, dude. Honestly, I'm a Starbucks fiend sometimes. Like I can't help it. It's like that inner teenage white girl urge within inside me. It's like I gotta go to Starbucks. You gotta go.
You gotta get the experience. So overall,
yeah.
you're not dipping your toes yet, but you do think at 180, maybe 160, it gets cheap enough.
Maybe, but you know, like when you're really buying a company hard, you're buying leaps, selling puts, sell put spreads, and whatever on a company. It's like you got to kind of be bullish, like that. The base is happening right now, and also, you know, you got to kind of think like, what's your timeline for this? Like, is this a good price to buy it? Like very long term? Yeah, probably. But is it a time to like load the boat and buy calls? Like, no, because your upside is limited. Like, it's not going to go back to 22 times EV and TM anytime soon. I won't. You have it. Like, I'm going to wait like at least like another earnings or two before I make a decision.
Got it. All right, Sam, thank you for joining on. We'll definitely have you on again. Sam's Twitter in the chat, and please make sure to follow him, Sam. Thank you for helping.
One more thing though. Do you mind if I share my screen real quick?
Yeah, go ahead.
Because I got something for you, and this is actually in a pretty hot item on eBay. Hold up.
Oh boy, don't do it.
Well, I'm gonna do it, man. You gotta like. This is definitely. Hold on. Oh,
I already see it. It's right there.
It's on there. I can share on the wrong screen. Yeah, dude. I mean, seriously, the thick Charizard cards. Like, I looked up the searching on Google, and like the thing is on a rampage, dude. I don't know if it's since they got you onto the Pokemon trading, but like, yo, that might be it, man.
You're spending way too much time with Garcia. I see.
Garcia's the man. Yeah. All right. But we got a hidden podcast episode tonight. So everyone tune into that if you want to hear some more from me and Chris about it.
All right. Thank you, Sam. See you next time.
Thank you. Later.
Okay, so I want to transition to macro, guys, and that we got some insights from Sam on Microsoft. We're going to go deeper into Microsoft in just a little bit after I get through some macro, but we really got to talk about some data we got this morning, because this data is just, I'm not sure exactly how to make sense of it. I'm sure you guys will try to come to your own conclusions, but it definitely is influencing why NVIDIA is up 7% right now and why the broader market is up 5 to 6% as well. Okay, so let's talk about macro. I spent a lot of time this morning reading articles. I woke up at like 5 a.m. I was reading a lot of shit. I was trying to make sense of it. And the reason I was reading a lot is because yesterday, my initial reaction to the JOLTS number was incorrect. The JOLTS number came out and we had 200,000 more jobs more than expected. So 8.184 million versus 8 million that the street expected. And I was like, oh, it was so funny. My mind immediately went to zombie jobs, fake jobs, more unemployment, therefore rate cuts. And that was not the correct syllogism. The actual correct syllogism, if we're really breaking it down, is if we have more jobs available, like logically, the reason the 10-year spiked was because there's a lower chance of cutting rates because the economy is expanding, aka more growth, aka more inflation. More jobs are available. If more jobs are available, more people can get hired. If more people can get hired, we have more GDP growth. So when I got that number yesterday, my initial reaction was completely wrong. I thought it led to unemployment, but in reality, it led to higher chances of lower employment, therefore lower chances of an interest rate cut. Okay, so that was the JOLTS report. Then this morning, we get something that makes you question the entire nature of what the JOLTS report was saying. So this morning, private businesses in the United States, this came out about an hour ago, added 122,000 workers to their payrolls in July. This is the least amount of hiring in 6 months. The street wanted 150,000 jobs. Even if you don't care about the street expectations and you don't think that's a good benchmark, this still empirically is the least amount of hiring in the private labor market. We're going to get more non-farm payroll numbers on Friday in the past 6 months. So this is very confusing, right? Because the JOLTS number said, hey, we have 200,000 more jobs available than expected, 8.184 million jobs. Economy is growing. There's all these jobs. People can get a job. But then this report says, actually, businesses are adding the least amount of jobs that they've ever added in the past 6 months, which is why yesterday I was so confused about the JOLTS number, because I did not think a higher JOLTS number meant that we would have more jobs available. Quite frankly, it felt like those jobs aren't real. So we know that jobs got revised a few months ago from 390,000 to 115,000 because those jobs disappeared since they weren't actually added. They were part-time jobs. They were government jobs. Those jobs kind of just went away from the April numbers because the government said, hey, we have to revise these. These aren't real jobs. So we already know the actual number of jobs reported sometimes does not match up with the reality of the jobs that are there. And months later, those get revised, which has a major dent in the broader unemployment rate. So I still think the Fed will cut in September, but the data is becoming confusing to make sense of a cohesive story. Either we have tons of jobs available and there's tons of growth happening, therefore inflation is still stickier than expected, or the JOLTS number is fake. Those 200,000 jobs that they provided, a lot of them just aren't that real. Maybe they're part-time jobs. Maybe they're not full-time jobs. Also, maybe there's zombie listings. I talked about the LinkedIn study yesterday that a lot of jobs are just placeholder jobs that are being put to be able to like gauge interest from an eventual prospect, but it's not a real job. And if you try to reach out to the recruiter, they just won't reach back to you. So potentially those JOLTS numbers aren't real. The private payroll numbers we got today are real, which means that rates are coming down, or rates are more likely to come down because we have a labor market that is actually weakening. I think the number we got this morning in the context of the least amount of hiring 6 months, if it's accurate, and the JOLTS report, let's say JOLTS is accurate, but it's not as accurate as the number we got today. All of this to say, I think Jay Powell goes super dovish this meeting at 2:30. And the reason for that is because if he's looking at this number and he's saying, holy crap, so private businesses are hiring the lowest that they've hired in 6 months. What's going to happen another 6 months from now? What's going to happen another year from now if rates are elevated at the same level? I mean, at some point, you logically cannot tell yourself, well, yeah, let's just leave rates high and see what happens. It's going to be the same mistake they made in 2021 with inflation being transitory. And that mistake repeating itself again would cement his legacy as the worst Fed chair of all time. Him cutting rates appropriately and navigating this pseudo soft landing would make him the greatest Fed chair of all time, better than Volcker, in my opinion, if he figures this out. So again, this is a lot of confusing data. I'm curious what you guys think. Some of you guys in the chat are saying this is fake. Hasi says the reports are always contradictory. That's why yesterday when the number came out, like it didn't make sense to me why we have so many jobs open. Immediately I assumed, oh, those are fake jobs, or like those are people that got fired and then those jobs got relisted. Now, technically, if people get fired, those jobs don't get relisted. But maybe some of them did to be kind of placeholder jobs and try to like gauge interest from the market. Not exactly sure. But regardless, it does seem like those rate cuts are coming, given hiring is slowing down. Now, that was just the first piece of macro news this morning. We got another piece of macro news that we got to talk about. Ray Mark says, what was your GPA in school? I had a 4.255 GPA, and I finished fourth in my class. I should have been first, quite frankly. The girl who finished first. You know why I wanted to be first? You guys will laugh at this. Well, I didn't care about being first for like an ego thing. I really didn't. I didn't give a shit about that. I wanted to give the high school graduation speech, and the valedictorian got to give the speech. And I think the salutatorian, but I wasn't valedictorian or salutatorian. I was fourth. So I wanted to give the speech, and so I didn't get to give the speech. And then I saw the valedictorian give the speech, and she sucked. I'm sorry. Like, that was not an inspiring. I don't even remember a word she said. I would have said some shit that would have left everyone thinking about something, maybe. So yeah, that's the only reason I wanted to be valedictorian. But no, it was not Courtney. Goodness gracious, it was not Courtney. But dude, it was just like, I remember like just cringing through the speech. Like, it was just like, I was like, what is she talking about? Like, this is not interesting. But regardless, that was my GPA in high school. Okay. So that was one of the pieces of macro data that happened. And then the Bank of Japan woke up and they chose violence. They raised rates up to 0.25. That's like their interest rates. It's technically 25 basis points because they were starting at 0. Maybe they're at 0.5, so it's 20 basis points. But they raised basis points. They raised interest rates by 25 basis points, and they're decreasing the amount of U.S. bonds they purchase by 50%. Basically, the Bank of Japan had 0 to like 0.01% interest rates before last night. And when I woke up, I saw that they had decided to raise those interest rates by 25 basis points. Now, why are they doing this? And not just raising rates, they're lowering the amount of bonds they buy by 50%, by about $20 billion per month. So 2 reasons. Number 1, they want to increase the value of the yen. Obviously, the yen has collapsed over the past year and the value of it has gone down. And they are wanting to reassure Japanese consumers who have had to pay more for imported goods that the value of the yen is okay and it's not going away and it's not going to absolutely collapse to the point where they can't use the yen anymore. Number two, although inflation's coming down in the United States, it's actually going up in Japan. It's not going up dramatically in Japan, but it is going up in Japan. So in March, Japan stopped their negative interest rate policy. Interest rates were literally negative in Japan in March. This was the last negative interest rate policy we had in the entire world. They stopped that in March. That was already a big deal. That kind of showed you that things were changing globally. As inflation now increases, they also don't want to be buying U.S. bonds at the same pace they were doing for the past few years, because you can't be buying all those bonds if you have to raise your interest rates. So by confirming the rate increase and reducing bond purchases by half, Japan is saying, hey, we think our consumers can handle slightly higher rates, which is what J-POW thought in 2022, and it has worked out well for J-POW. And we think it will overall spur growth without burdening consumers. Now, as soon as this happened this morning, the 10-year went to the lowest levels. Right now, 10-year is at, so when I screenshotted it was at 4.133. Right now, wow, 4.106, folks. Look at the 10-year. Wow. We are talking about a decline. Now, this decline is the lowest since March of 2024. Why is this happening? Well, if the Bank of Japan's rate hike is perceived as potentially destabilizing, or it leads to concerns about economic growth in Japan, which it kind of is this morning, it might trigger a flight to safety. And the safety, even though our country has $35 trillion in debt, we have the most safety out of all the debt that exists across the entire world. So Japan doesn't feel raising rates by 25 basis points should discourage growth. If anything, they think it'll encourage growth. However, investors are obviously seeking the safety of U.S. Treasury bonds. That would be pushing yields down as bond prices rise from increased demand. And all of this is happening the day Jerome Powell speaks. So in a nutshell, we got jobs that are being hired in the United States for private businesses at the lowest in 6 months. Then you got the JOLTS number that's saying, actually, we have hundreds of thousands of jobs available, which is contradictory to the private payroll number. And then you got the Bank of Japan saying, screw it, we're going to raise our rates and we're going to stop buying U.S. bonds to the extent that we're buying them, because we feel inflation in our country is actually increasing at a precipitous rate. There is so many things that are going on. And then on top of that, you had Microsoft fall almost 10% after hours, and it almost collapsed the entire market. So all of this to say, I think that the JOLTS data, the private jobs data, or the Japan data only signals a rate cut, even if there's some confusion and incohesion within that data, because quite honestly, the lack of like a sophisticated understanding of everything that's going on, and the destabilization of all these things that are happening via the data, kind of shows a broader sense of weakness in the economy, as seen by actors like Japan that just don't feel they can have 0% interest rates or even negative percent interest rates. And as a result, I think the Fed, if anything, does a 25 basis point cut in July. And I think in September, not July. It would be crazy if they do July. We'll see today. And J-Powell's going to sound dovish, because at the end of the day, he does not want to risk things getting so weak to the point where when he cuts rates, it would be a reaction versus a anticipatory cut from a sign of strength versus a sign of weakness. And so I guess we'll see what happens. But yes, Brian, what a wild world. Absolutely a wild world that we're having right now. Now, some people did not see Tom Lee's message last night. Speaking on the theme of macro, and then we'll get back to Microsoft and AMD. Tom Lee put out an intraday alert yesterday at about 2:30 p.m. Maybe that's why he showed up in my dream, because this was like such an important alert. Dude, when I saw him in my dream, I was fangirling in my dream, by the way. It was absolutely insane. But like, then I woke up and I was like, oh, I've never met this guy. Intraday alert, buy the fear, high probability of a 4 to 5% day equity rally post FOMC led by small caps. That would put the S&P at 565, where it was 2 weeks ago, if we bump up by 5% post FOMC. The last time Tom Lee did this, he was exactly right. He said, buy the S&P, it's at 540, it'll go to 550. Within 3 days, it got to 550. I mean, when he has a very specific prediction, it tends to be right. At least for the past couple of years, it's been correct with these very specific tactical moves. So if he's correct around this, and J-Pow not only pauses rates, but is very dovish in terms of what he says, then maybe we're going to see some broader pricing in of that into equities, and then markets potentially will benefit from that going into August. Remember, we looked at the chart yesterday. August tends to be a horrible month for the stock market. In an election year, August is up 100% of the time. October is actually down 57% of the time, but 100 times, 32 times out of 32 times, the last 32 election years since 1950, we have had August do well. So, I mean, although I think it's probably going to be a little choppy because it's August, maybe the choppiness ends up leading to green at the end of the entire month. Harry says, I decided to order a vanilla milkshake for delivery. Dude, a vanilla milkshake would taste much better than this. Trust me, this doesn't taste that good. All right. This is like, there's no sugar in it. So the banana is the only sugar we're getting. But at this point, I'm just like being a man and drinking it. Someone said it's a mayo milkshake. I almost threw up in my mouth when I saw that comment. Please never say that again. Don't even mention mayo and milkshake at the same. We can't do that, dude. We cannot do that. So lots and lots of crazy stuff happening in the pre-markets, and I guess we'll see what happens when JPOW speaks. JPOW speaks at 2:30, 2 p.m. We get the result. Eastern 2:30 Eastern. We get him speaking. I'll be live at 2:25. Okay, cool. So there we go. That is the larger macro update. Let's take a small quick look at what Dan Ives has to say about Apple, and then I'm going to get into a deep dive into what happened with Microsoft yesterday. Here we go.
Done the cloud business. We've done the chip makers. We need to finish with your favorite, your baby. We need to talk about Apple. The Mark Gurman report of the last couple of days, you've seen it. The chance that the iPhone is released in September without all the AI goodies. Now, you've had this thesis for a long time. They'd come out with this phone, there'd be this monster upgrade cycle. It's one of the biggest pillars for your bullish call on the Apple stock. Does it change with that report from Mark Gurman?
Not at all. I
Why
mean,
not?
look, great report by Gurman as always, but developers got it on time. All that matters is developers are going to build hundreds of apps on it. And on iPhone 16, even if it's an update, October, we're talking a few weeks. And I go back to all of our Asia checks. We'll be in Asia again this weekend. It started off as 80 million units for iPhone 16. Guess what it is now based on our checks? 90 million. So the point is, it is not going from 80 to 70. It's going 80 to 90. What that means is Cupertino knows, Cook sees it, where demand's going to be in an AI-driven super cycle.
Do we already have a sense of what some of the AI applications are, consumer facing, that are going to be sort of game changing? Because I understand on a sort of corporate sphere, but just getting sort of an emoji that's personalized isn't necessarily a game changer.
Yeah, of course. And that's why what's so important, a year from now, you're going to have hundreds of apps on this iPhone, on the Apple ecosystem that are AI driven. That's why developers, that's the hearts and lungs of this story. Apple's giving it to them, Apple Intelligence. Now the AI consumer story runs through Cupertino. And it just comes down to later this week, Cook's going to talk about, obviously June I view as almost a background noise to the main event. September, when this gets launched, what I view is really a strong upgrade cycle. Very importantly, China, this will be the last negative quarter. China growth story is back for Apple.
Before we went on air, you were talking about how you've got a lot of events to go to and you didn't really want to show up very casual. What does casual look like for Dan Ives?
So, well, first of all, the biggest insult for a college football fan, or if someone calls you a casual, to me, that is the most insulting you could ever get as a sports fan. Someone says you're a casual. Now, obviously, Farrah being a huge F1 fan, he is along with the Netflix Epic got me into F1. I will be going to my first F1 race in Vegas, wearing my Ferrari gear.
Okay, very interesting. So who agrees, dude? Who agrees with that Apple thesis? I'm actually curious. We haven't done a check on this in the chat in a long time. Is everyone still on board that Apple is going to be the gateway to AI for consumers, and as a result, you buy this sucker at 34 times PE with 0% growth, up 1% in the pre-market 221. Again, Apple is up 31% from the lows. So it's had the run, very nice run since WWDC. Question is going to be, does it get to that 275 level that Dan Ives thinks it gets to if Apple becomes the AI ecosystem? People are saying no. I thought most people were bullish on this, dude. People are saying no. Wow. I thought most people were actually bullish on Apple. I mean, look, I'm not the most bullish on Apple, but I do think they're going to become the gateway for AI. But it's the one question that he asked right there that they, oh, wow, we have 4 minutes until the market opens. Time flew. The one question they asked was, what's the big use case for AI, right? What's that killer app? What's the Instagram or Facebook or TikTok of AI? Dan Ives didn't really give an answer. And it's because Dan Ives, I don't think he knows. And I don't know what the answer is as well. I got to show you guys this one thing right here. This is a company that just launched yesterday. It's called friend.com. Friend.com. It's an AI wearable You wear this pendant around your chest. You can talk to it. So you tap it and you start talking to it. You pause, your friend, aka ChatGPT, will think for a moment and come up with something to say. Then it sends you a text message on the friend app to check your phone to see what your friend said. These are the types of AI use cases for consumers that are popping up out of the woodworks. I personally am not a fan of this stuff. I think this stuff is ridiculous. I think talking to a little pendant and then it texting you and having a conversation, I don't know if that becomes big, but I'm bringing this up to say this is a new startup. What if Apple just does this? What if Apple just makes Siri your quote unquote companion, and then you don't need to buy external products that are just using ChatGPT as the wrapper to be able to translate what you're saying and then try to give you a response? Because Apple is that exact product that does it. So I do feel like Apple's going to commoditize a lot of this stuff, but then I'm thinking, is that even useful? Do people literally want to talk to this companion? Maybe they do in some use cases, but for the far majority of people, do they really want to? And I think that's one of the broader issues that I think Apple's gonna have to run into. Some of you guys are saying that's pointless. Some of you guys are saying it's helpful. So I think we're gonna see with consumer adoption in the next couple of years if people really do want to speak to an AI. I mean, maybe people do, right? Maybe people want to have more friendship via artificial intelligence versus like actual friendship, or maybe it's a use case for people that are getting bullied, right? There's so many different ways I could imagine it being used. I just don't know if billions and billions of people are going to be speaking to their AI all day versus regular humans. But if they are, maybe Apple controls that market as well. And so we'll see what happens. All right, we got 2 minutes until the market opens. Today's going to be a very important day. We got Jay Powell speaking at 2:30. I've got a lot to dive more into in Microsoft and AMD. So after the bell, I want to give you guys a bunch of stats on Microsoft's move. Let's actually put Microsoft on the screen. That'll be the stock to watch as we get into it. Microsoft fell. Wow. Microsoft fell almost 10% yesterday, 40 seconds away from the market open, and Microsoft is only down 0.52%. It was at 390. It's at 420. If you bought the 390 dip, congrats. If you're on the market close yesterday, it literally felt like 2022 and the world was crashing. Freaking Starbucks was looking at us up 5% while the NASDAQ was down 1%. So it was a really tough, emotional market close. But it's Microsoft at the end of the day. Satya had the earnings call. Street looks like it calmed down, and now we'll see in 20 seconds how it opens. And maybe the Microsoft collapse ends up going green, which might signal what's going to happen for Meta and ultimately for Apple and Amazon when they report as well. All right, here we go. It is Wednesday, July 31st, last day of July, 9:30 a.m. Thank you, everybody, for being here. The stock market is now open. Wake your ass up. Here we go. Microsoft opens down 0.53% at 420. Basically, Microsoft is flat from yesterday's high, which is just incredible. I mean, it went through all the whirlwind of emotions that it went through, went up, went down, cloud revenue, this, and that. It's back to basically normal. We'll see if we have a larger red candle, now down about 0.75%. But so far, not too bad. Apple goes red, up 1%. CrowdStrike goes down 0.24%. Norwegian Cruise Line, shout out to Chris. He's been long the cruise lines for the past couple months now. They had a great earnings. They're up 4.3%. Meta, 471. That's up 2%. IWM, 223.94. That is up 0.62%. All eyes will be on small caps today after Jay Powell speaks at 2:30. SoFi, 745. They're up 0.34%. Boeing had earnings. They missed on EPS, missed on revenue. They're still at 1.42%. We'll go in their numbers in a second. But Boeing right here at 189. Also, they replaced the CEO, which was another positive news for Boeing. S&P, wow, 1.2% green. 548. S&P was 537 last night, guys. Like last night, if you fell asleep after the market closed and you woke up this morning and like it kind of feels like nothing happened, last night was tough because it felt like things were really falling off a cliff. S&P right here, up 1.2%. The NASDAQ up 2.1%. Palantir, look at that, up 2.65%. They were at 25.84 yesterday, now at 27.10. So Palantir really establishing that base at 27. Wingstop is up 3%. They had earnings today as well. MasterCard up 6%. They had earnings. They beat on EPS and revenue. T-Mobile beat on EPS and revenue. They're at 181. They're up 3.34%. Starbucks back into the 80s, up 5.4%. Not bad. Starbucks is up. Let's go to the semi names. I think the semis are doing well. Wow. NVIDIA is up 7%. NVIDIA lost $165 billion of market cap yesterday. It just gained $170 billion in market cap. Now, another thing that's important about NVIDIA, 800,000 shares, if you look at the option order flows, were purchased of NVIDIA yesterday when Microsoft was at $390. NVIDIA's price was $100.01. So if you had, put in an order to get filled at $100, 100.00, you would have missed it. If you had an order of 100.01, you could have got your order filled. 800,000 shares were filled. Maybe that was by a whale. Maybe that was by an institution. Maybe that was by a bunch of retail. But people got some cheap NVIDIA yesterday at $100. At $100, it was trading at 21 times price to price to earnings for 2025 earnings, which if you assume that's $5 EPS, you're paying 21 times. That's incredibly cheap when it was at $100, even at 111. But the question is if they maintain that growth. So NVIDIA right here at 111 up 7%. SMCI up 5%. AMD, they had a great earnings. We'll talk about them in a second. Up 7.55%. Intel is up 1%. Taiwan Semis up 5.6%. ARM, they have earnings after the bell. They're up 7%. Lam Research up 4%. Dell up 5.6%. And then Micron is up 6% on the day. Some of you saying in the chat, you got in on NVIDIA. You got in at 103. OpenSize got an NVIDIA. Not bad at all. Yeah, if you got the NVIDIA dip, congrats. I mean, some people were scared to buy NVIDIA yesterday, but those 800,000 shares that put in that 1 cent above where it was almost going to go, but then it didn't go to, they ended up getting their shares. Marvell as well, up 5.75%. We will have Jose join in about 10 minutes, and he'll break down AMD's quarter for us as well. So we'll go deeper into AMD when he joins. But overall, AMD had a very successful quarter. Data center revenue growth is up 115%. Top line revenue growth is up 7%. They increased guidance. I mean, quite literally, dude, the only thing better than sex right now is hearing someone say they increased the guidance, because when they increase guidance, you're likely going to have a stock that goes up. So Lisa Su says she increased guidance. Microsoft slightly increased guidance for the cloud revenue. It is what we need to see. And these companies need to keep increasing guidance. If Palantir can increase guidance going into Q2, then we're going to have a very fun quarter, especially if that increased guidance gets us closer to 25% year-over-year growth. Google at 174. Wow, look at Google. It was at 166 on Search GPT and on CapEx expenditures. Doesn't matter. Google's at 174. NVIDIA's at 111. Amazon at 184. Amazon almost got to 175 the other day. Tesla is up 3%, 229. Even Tesla was at 219 yesterday after hours. Apple at 221. Microsoft down 1.6. So Microsoft is getting punished, but it's not the type of punishment we saw. It's not the type of punishment we saw back in after hours yesterday when it was down almost 10%. Where is CrowdStrike? Oh, by the way, no one asked Microsoft about CrowdStrike. CrowdStrike's green right now. Literally none of the analysts cared about CrowdStrike. So maybe they've kind of factored it into a CrowdStrike problem versus a Microsoft problem, or they think it's such a rounding error on Microsoft's overall revenue growth that it's not something they should be too concerned about at the end of the day. So that's what we got in the context of Microsoft and CrowdStrike. Okay, so a couple stats I want to show you guys as well on Microsoft. Now, these stats were kind of crazy. Microsoft spent $19 billion on CapEx this quarter, which was up from $14 billion last quarter, and it was up from $10.7 billion. Robinhood right here, $20.82, up 2% of the day, up from $10 billion, $10.7 billion last year. So they increased CapEx by 50%, which is another reason the street probably went down on the news. But Microsoft, but ultimately the street didn't care, because at the end of the day, the CapEx obviously is a good thing. And that's what Amy Hood said on the earnings call. Hey, we're increasing CapEx because we're going to get an ROI from it. Here are 3 stats that stood out to me that should lead you to believe AI is not a joke. And although AI is not at the S-curve of monetization, it's a beginning. 60,000 Azure AI customers for Microsoft. That's up 60% year over year. 77,000 GitHub Copilot. Copilot is what helps you code on GitHub. That's up 180% year over year. And then Microsoft Teams, which has a bunch of new AI features that have fueled its growth. 3 million seats. That means 3 million people in the enterprise, in corporate America, the global corporate sector, are using Microsoft Teams. That's up 400% year over year. These 3 stats alone lead me to believe that if Microsoft even kind of matches these numbers over the next few quarters, the revenue potential from this, the revenue growth potential from this should be astronomical. And it should quite literally lead to the justification of a $3, $4, $5 trillion market cap. And the street's willing to give them that premium before, they definitely prove it. But the early innings are showing that the market, or that Microsoft's AI arguments are real. And if we see some of that from Meta this morning as well, or this afternoon, that's going to be important. to further factor in their growth. Meta right here at 470, IWM at 223. SoFi just went red, 742. SoFi's red. S&P is still green. NASDAQ is up 2%. What would hurt really badly today is if Jay Powell speaks, he's super dovish, and then the market tanks. That is the worst case scenario I can imagine, meaning we fall 1% on the NASDAQ, the S&P, IWM, etc. Because then the market's basically saying, hey, we don't believe Jay Powell, or we don't believe that rate cuts are even going to matter. I think the probability of that happening is very low, but that would be my bear case for today. Apple right here up 1.67%. If the market were to tank off of really good news and a really good Jay Powell speech, Nvidia at 112, that's up 8.35%. That would be pretty bearish. However, I don't think that's going to happen. I don't think we have to moon on Jay Powell, but I definitely don't think we have to tank. And as you can see right here, Nvidia up 8%. It goes to show you, as much as the market gets scared in certain moments, at the end of the day, this is a bull market. And if you want exposure to these stocks, you're going to have to buy them. And Nvidia going up 8% right here, it's because the street realizes, hey, this is like stupid. We want to own one of the greatest companies in the world that's accelerating the importance of generative AI. And AMD going up 8% definitely helps Nvidia's numbers as well. And so that's a really important thing. Palantir right here, 27.10. If you guys missed it, Satya Nadella did mention Palantir 27.14 on the earnings call yesterday. It was really exciting just to see him say Palantir is an industry leader. So that was a pretty cool thing to see from Satya Nadella. 27.12. We've got earnings for Palantir on Monday, by the way. So as crazy as this week is going to be, we still have today and tomorrow with Amazon, Apple, Meta, etc. Monday is going to be the craziest out of all of them, because the reason it's crazy is Palantir has a pretty decent premium, going up 30% in the past month. And so now it's time to kind of justify that premium, or at least show that they can justify that premium in the future, even if the revenue growth is not fully there in Q2. So Monday after hours is going to be very important for Palantir. Just because we're in a bull market doesn't mean there won't be pullbacks. 1000%. I agree. 100% agree. And we've already seen some pullbacks. We haven't seen corrections. Corrections is 10%. Pullbacks is more 5 to 7%. We've seen that across the S&P, across obviously individual equities. But maybe we do get a full-on correction. It's just, again, a full-on correction to me in this bull market would necessitate some level of data that is really bad. And all the data we're getting just shows we're going to get a rate cut, and a rate cut's supposed to quell off the fears of a recession theoretically. So we'll see what happens. I listened to Meet Kevin's crash video yesterday. I tried to understand his argument. Some of you guys said he went short right before Microsoft earnings. I'm not sure if he did that. I know he has calls on short QQQ, and they were printing yesterday after hours. His calls were up. Now they're down 6%. The calls are probably down because the market's up. But after hours, he was right. So if he closed those after hours, then he probably made some money. I listened to his bear case again. Again, his bear case is resting on the thesis that the labor market's going to fall apart. And I just don't know if we were at the point where a recession is coming. He looked at a earnings from a company that makes potatoes, if I'm not wrong. And in that earnings, and I like when you do deep dives into like these, minuscule companies, because you try to get a better understanding of what's going on. That potato company said, hey, yeah, like it's bad. Like people aren't buying enough potatoes. We have to decrease our margins. We have to increase our volumes to try to make up for the loss, all that stuff. And he's using that argument as like a justification to say the consumer is really unhealthy. I don't know if that's the best example of it. That is a example, and that might be a really important example. I don't know if that's the best example to say, hey, every company is struggling. LW, yes, that's the name of the company, LW. That's correct. You can't close calls after the market. You're right. So if he had those calls, then they're probably red right now in the morning. But he could have sold his short QQQ if he had just stock. So as a result of that, I do think Kevin's scared. I think a lot of people are scared, and I think that's okay. It's okay to be scared, especially when you've had juicy gains. He's still net long, right? 75% of his portfolio is long, even though some of it is a hedge going short. Palantir right here, 27.30. But I am trying to listen to every solid bear argument. I mean, if you have a bear argument, DM me on Twitter. I open my DMs. If you have this like massive bear case and you want to spell it out, I will read it, because I want to see as much of a bear argument as anyone else thinks there is. I don't want to be stuck in a bubble thinking that, oh, rates are, going to get cut and the market's going to go up. Robinhood right here, 21.08, up 3.3%. But every argument I look at is just, it does not feel so substantial to the point where you would actually leave this market. Maybe you trim a little bit, maybe you hedge a little bit, but leaving the market in its entirety, given all the data we're seeing, it just doesn't seem like that's the moment right now at this point. But maybe I'm wrong, and I want to see a lot of different bear cases that exist. Microsoft's now down 1.56%. Again, a relatively small fall by Microsoft. Nothing that crazy. Microsoft was down 1% the other day. Like, this is not this is not really substantial by Microsoft. So the crazy part yesterday was when it fell, 8%, and we were at 390, and Meta was at almost 450, and Nvidia was almost below 100, and then Google was at 165. Like yesterday got pretty intense, and it goes to show you the fragility of this market as well, because things can switch on a dime, and that could happen. Danielle says Amit likes arguing with bears so much he downloaded Grindr. That's a funny one. I'm gonna give you that. That's a funny one. By the way, Match Group had earnings yesterday. Speaking of Grindr, Match Group is up 9%. I don't know exactly what got the street excited, but I think the Tinder monthly active user growth spiked, which is what the street got excited about. Grindr, as a result of that earnings, is up 0.57%. Again, Grindr really doesn't have that much volume. Look, the volume is 5,000 shares, so it really doesn't move too much. But if you're in Match Group, if you're betting on online dating, you're up 10%. So even that, like as a case point for consumers, if consumers have the money to be able to pay, when I mean consumers, I mean guys, because girls don't pay for this. If guys can pay like, what is it, $20 a month or whatever to get a premium Tinder subscription, that's how Match makes money, or a Hinge subscription or whatever. Which, by the way, if you're a guy, I talked to one of my one of my guy friends, you have no choice. You have to pay. Like, he pays $50 a month for Hinge. You have to pay for that. Like, the algorithm won't match you with any one of your interests unless you pay. It's just like a literally pay to play. So he was like, dude, you, like, don't even try to use it without paying $50 a month. So that's how they make money. If consumers have the disposable income enough to pay that money, then maybe that's another sign of strength to an extent for consumers. And there's actually some more money in the system. IWM is red. Okay, IWM just went red. QQQ, NASDAQ's up 2.2%. Palantir 2707, Robinhood 2102, CrowdStrike 234.95, Apple 221. Norwegian was up 4%. Now it's up 2%. Meta at 468. So we're seeing a little bit more of a red candle popping into this market. But overall, Microsoft down 1.6% on the day. All right, let's discuss AMD. Let's bring on our favorite guest on the show. You guys all love him. You guys all know him. Jose, what's up?
Doing pretty good this morning. Pretty excited to see a lot of green in the semiconductor space. But like always, thank you for having me on the episode.
Absolutely. So before we get started, I'm going to put Jose's YouTube in the chat. Please make sure to follow him if you are not following him. And if you want to get deep dives on AMD, NVIDIA, etc., his channel is where you'll get really the best content after earnings in particular. Jose, AMD's up 8%. I have a lot of questions, but give me your raw thoughts. Do you think it deserves to be up today?
Yeah, definitely. I mean, I came here a few days ago and maybe a week ago, and I mentioned how I really do enjoy AMD at that $150 price point. I think right now the market is seeing that at least it's worth that. So I don't think I'm still very bullish at this price point, even after this run up here for AMD. Overall, earnings were great. We saw huge growth in data center from their MI300X. We saw their core server CPU also gaining market share in kind of the enterprise market, where one thing that they did mention is their server CPUs, which is their Epic line. 1/3 of their customers that grabbed this 4th generation Epic CPU were the first time them using AMD CPU. So that's pretty impressive. It means that they're gaining market share from other leaders like Intel. The other great news that I really wasn't expecting, and I think this helped out a lot, was their embedded market. So Xilinx. Xilinx has been in a huge downturn due to kind of
what is Xilinx?
Xilinx. So that's an acquisition that they purchased a few, I want to say maybe 2 years ago. It deals more with chips that go in things like automotive and things like planes and kind of your outside your PC elements. So aerospace and defense, they create a lot of kind of embedded chips. And this is a huge cash flow machine. But the past year, this is down. I believe earnings were still down almost 50% on revenue in that segment. AMD mentioned that this quarter was pretty much flat from last quarter. They mentioned last quarter was the bottom of that segment, and that segment now should expect revenue growth. And like I mentioned, historically, that is a huge cash flow segment for them. So for them to start to see growth in there, I think they have multiple tailwinds from AI PC, from getting gains in server CPU, from increasing their MI300X AI accelerator, to now the embedded market also seeing some nice tailwind. So I think investors definitely have the right to be excited right now.
Okay, so I think they crushed it on a lot of different metrics. You just talked about a bunch of different metrics they overperformed on. The guidance raise, can you speak to that? What contributed to that? And was that enough of a guidance raise to get the street excited?
I think right now, the guidance was okay. I mean, it was a nice beat, especially in the top end. At the end of the day, Lisa Su is always a little bit more on the conservative side. She did increase their guidance on the AI chip by another $500 million. So I think it's 4.5 billion. I think we're going to continue to see that. I think the overall sentiment was that maybe there might be some pocket of weakness of AI spending. But because at least it was a little bit better than expected, investors were pleased. So I don't think it was a crazy beat in guidance, but at least it kind of erased that fear that we've been having the past few weeks of, hey, look, maybe AI chip demand is not really real. Maybe AI isn't really real. And I think at least for now, it kind of brought us back to reality that at least for now, this is definitely the real market.
Got it. Now, the data center revenue growth at 115%. What should investors look at from that? So AMD right here is up almost 11%. That data center revenue growth is phenomenal. Is that just an argument that, hey, like if you believe in AI, you have to believe in NVIDIA and AMD, given they're producing the actual numbers around data centers?
Yeah, I mean, you have to. AMD, I think the top 4 players that are providing some form of AI accelerators are going to be NVIDIA, obviously, AMD. Those two are providing great GPUs. And then you have Marvell and Broadcom, which both kind of provide custom ASIC solutions that are good for AI accelerators for certain workloads. But I think right now, if you believe in the AI market, you believe in those 4 companies. Obviously, NVIDIA leading, and I wouldn't say that being bullish on AMD for AI chips means you're bearish on other companies like NVIDIA. I think right now the market is so big. There's the demand is still so high versus supply that everybody is going to be winning, at least for the short term. Maybe that might change in a few quarters. Maybe we might see one winner take all. But I think right now where we're at in the space, multiple winners can come in from the same industry.
Now, the gaming center revenue, I want to ask you about this because gaming center revenue is down 60% year over year. Mm-hmm. Does gaming even matter anymore for AMD? Is that like a thing they should care about?
Yeah, I mean, it's for AMD, yes, right? I want to say for a company like NVIDIA, no, because you see the difference in revenue segments. I think the gaming still provides a decent amount of revenue for AMD compared to their total revenue. So it's still somewhat important. But right now, like we are expected, we're at 5th year already in whatever the PS are. We're in PS5, so 5 years in PS5, 5 years in the Xbox platform. So no one's out there really purchasing these consoles right now. So you tend to see a decrease in that segment. So that's something that if you're an investor in the semiconductor space, if AMD, that's the cyclicality where once you're already late in the term of console cycles, you're not going to expect much revenue there. And usually that's already priced in.
So hold on, when we get a PS6, AMD is going to benefit from that, is what you're saying?
If PlayStation decides to go again with AMD, and I believe they are, both Sony and Microsoft use their AMD's chips to power those systems. They can obviously change places. For example, NVIDIA, I believe the Nintendo Switch is actually powered by NVIDIA chip. But I don't know if the next Nintendo Switch is going to be powered by NVIDIA. But some of these players, they do go with these semi-custom solutions to kind of power their gaming console.
Got it. Okay, so let's talk Microsoft. Microsoft fell 9% after earnings. They pretty much recouped everything that they lost, down about 2% right now. Same argument, increased CapEx. Here's my very specific question for you. Microsoft said they spent $19 billion in 90 days on CapEx. Does that mean NVIDIA is going to just crush to a level that we can't even understand?
Sorry. I mean, it just gets me excited when I hear $19 billion in CapEx from one company. I want to say it continues to show that there is demand for AI. I mean, Microsoft mentioned that their AI is still constrained on capacity and not demand. So that's one thing that they mentioned during the earnings call. The other thing, that 19 billion, right? They mentioned it's split in half. Half, it's usually like the infrastructure needs, which is like leads, which is land, which is data center builds. And the other half are the actual chips themselves. So one thing that got me thinking is in the future, if we see a slowdown in CapEx, it doesn't necessarily mean bad for AI chips. Remember, all these lands have multiple acres, so they could just maybe not need to purchase new land. They just need to fill up that space with more chips. So I don't know if I'm explaining it correctly, but I think
break it down again. You're saying if because this is really important for big tech. If we see a decrease in CapEx, maybe by like Q4 or Q2 next year, that's not bearish for NVIDIA is what you're saying.
Not necessarily. Obviously, we have to dig in deeper, but they mentioned that 50% of that capex was on like infrastructure needs, and infrastructure needs are like the buildings, the lands, and the other 50% was AI chips. You really, because of the supply market, you really can't buy all the chips you need at once because
Right.
of just building servers. You can't build them all at once, but you can only really much build a big building once. You can pretty much only buy a huge pack of land once. So
Right.
I think what we need I think right now, the market is obviously going to react one way if capex decreases. But as individual investors, we have to try to see where that capex is really seeing the decrease. Because if we do see a capex, in theory, the market is going to overreact and create a bearish thesis for these AI chips. But it's not necessarily a guarantee that it means that. So that's something that just opened my eyes and something I'm definitely going to keep a closer eye on for future earnings.
I think that's such a good point. I didn't even think of it like that. So basically you're saying, hey, 50% of CapEx is being spent on buildings. That's a one-time fee. The other 50% is chips. So part of the increase in CapEx is because there's buying some freaking buildings. After they stop buying the buildings, they might have to keep buying the chips. And that would still contribute to NVIDIA, even though the market immediately would think, oh, NVIDIA is going to go down because the CapEx is going down. But that might not be the whole story, which would be a very good buy the dip if that is correct.
Yep, definitely. So I'm not saying obviously it's bullish for them, but it's great to understand where that capex spending is going to be before we really start that fear mongo in capex reduction, if that happens. But they did mention fiscal year 2025 for Microsoft is going to be higher than fiscal year of 2024.
Okay. How do you think? Did you listen to Lisa Su on the call?
I read the transcript. I didn't. I was out for dinner during the earnings call. But
you were celebrating all those juicy fucking gains. AMD goes up 10%. You say, let's go to Olive Garden or something. Where'd you go for dinner?
I'm down here in Florida, and we went to like this fresh seafood place with the wife and the baby. So we enjoyed some fresh seafood.
Dude, your wife, she must see these semis. She must have an alert and just like Robinhood or whatever alerts her when NVIDIA goes up 10%. And she's like, oh, we just made another million.
We can go out to eat again.
Go out to eat. All right. So last thing for you, Jose, thank you for this analysis. Qualcomm and ARM today. Quick thoughts on what do you think could happen there?
I think Qualcomm definitely can benefit from a lot of different industries. I mean, Qualcomm is providing AI CPU chips for the laptop market. And we heard from AMD that PC sales are increasing. So that could be bullish for Qualcomm. You just had, I think earlier today, you posted this CNBC point from Dan where he talks that there have seen an increase in iPhone demand.
Yeah.
Qualcomm provides a lot of chips for the mobile market. So in theory, if you're seeing growth in iPhones, you should be also seeing growth in Android. Qualcomm provides chips for Apple phones as well. So there's a lot of tailwinds right now that Qualcomm can definitely benefit. And they obviously just overall Qualcomm, I think, has a nice amount of risk to reward. I don't own it, but definitely want to keep a closer eye out. ARM is a different story. I mean, I think this one's a little bit ahead of itself. It's definitely an important company. Earnings, in my opinion, with AI PC going up, with all these other industries are going up, they should showcase a huge revenue growth. But how the market will react, that's different, as I do believe the stock has run up a nice amount.
Got it. All right. Sounds good. Jose's YouTube again is in the chat. Jose, thank you for coming on. And I think we'll have you on later this week to break down ARM and Qualcomm as well. So thank you. Thank you for being here. Everyone, please make sure to subscribe and enjoy the golden caviar. As
thank you.
The baby eats because AMD's up.
Yeah. All right. Take care, guys, and appreciate it.
All right. Thank you, man. Later. All right. So the 10-year, as Mark pointed out in the chat, is absolutely collapsing right in front of us, guys. We're down to 4.09. I mean, a little bit more, we start seeing a 3 handle on that 10-year. We haven't seen a 3 handle since March. Sorry, February. So February 1st, we had 3.81. And then we spiked. And then since then, we haven't seen the 3s. We've seen the low 4s, but this is the lowest we've gotten since March. February was when we had 3.8. So let's check on Bitcoin. Is Bitcoin getting some momentum? As the 10-year comes down, that should be good for all asset classes. Bitcoin, yeah, there you go. Bitcoin 66.47. Palantir 27.17. Robinhood $20.98. Oh, update on Robinhood. So they have 50,000 credit card users now. Vlad tweeted yesterday they sent out 100,000 invites. 50,000 signed up. So a 50% adoption rate, quite frankly, is incredible. They still have another 900,000 plus invites to send out because there's a million people on the wait list. They're doing it sort of in a slow way that makes sure they get all the data that's correct, so that when they unleash the credit card, it's in a way that is productive for the business. But 50,000 people already have that card, and I know a lot of people have been texting me that they got their card as well. So that should be coming out even sooner over the next coming months. Google at 172, they're up 1%. JetBlue's down 5% today. They were up 20% yesterday. So they're up from 595. They were at 730, but now they're down on the day 5%. ASTS up 3.4%. They were down 5% yesterday as well. Chewy 2483. Roaring Kitty has not tweeted since June 22nd. So I don't know what happened with that, but he seems to have disappeared from the broader financial ecosystem. I think he still owns his Chewy, but we haven't got a portfolio update, so we are not sure. Sprouts Farmers, this one had a great earnings. This was up 2.3%. Oh, let me pull up the numbers on earnings. I'm using Webull, Diane. Webull, free platform. You can download it. I don't invest with Webull. You can invest with it, but it's a Chinese company, and I just never put my money into it. I also never, I never liked trading on Webull. Like Robin is just easier for me. So, but a lot of people do like trading on Webull. So you could use it for that. So here are the earnings we got this morning. So we got a decent amount of beats versus misses. So you have MasterCard beat revenue, beat EPS, 6.35 billion, 331 EPS. T-Mobile beat revenue, beat EPS. These are two consumer companies. Again, I know there's some weakness in the consumer. I'm not denying that. But MasterCard and T-Mobile, at the end of the day, if consumers aren't buying phones and having cell phone plans or spending, aka via MasterCard, then you're not going to have these beats on EPS and revenue. Now, Boeing missed. We thought this was going to happen. So Boeing missed. We knew that was going to happen. So not that big of a deal. Marriott, another consumer company. People have to stay at hotels. They barely missed on revenue. I mean, this miss is insignificant. And they beat on EPS. So people are staying in hotels. The Brian Chesky for Airbnb announced that they have like 4 million different Airbnbs in Paris. Or 4 million people staying in different Airbnbs in Paris on Airbnb because of the Olympics. So we are seeing people start to travel a lot more. And then Altria, they missed on EPS, beat on revenue. This company sells cigarettes and marijuana and stuff like that. Again, pretty decent earnings. So we haven't seen any companies really crap the bed on earnings. Microsoft definitely didn't do that. Again, some companies in the broader 2 weeks that we've been covering earnings have not done the best, but majority of them have done okay. Hess, they beat on earnings by 3%, beat on revenue by 5%. KKR beat by 9% on revenue, beat by 2% on EPS. Wingstop, they beat revenue by 10%, beat EPS by 17%. Wingstop, again, people eating chicken wings. That's another consumer play. So companies seem to be doing all right. It does not feel like companies are necessarily crapping the bed. PayPal is up. Wow. Is this real life? PayPal is up 3% after being up 8% yesterday. This can't be real. This is crazy. PayPal at 65.94. NVIDIA up 10 percentage points. NVIDIA's up more than AMD right now. And then Tesla. Look at Tesla. 233. Palantir 27.27. There you go. It's like we have these slight little pullbacks and then the market just comes back. PayPal now at 66 and decides that it's time to buy. Tesla right here, 233, up 5% on the day. AMD at 151, and NVIDIA at 114. I think AMD's data center revenue also gave Tesla some love, the broader semiconductor cycle, but also Tesla. And IWM up a little bit. It's lagging the other stocks and indices today. But AMD really set the tone for a lot of these companies to end up doing okay. And Microsoft, even though Microsoft is down still, Microsoft had a phenomenal earnings. Just the comps were a little too high. Look, now they're only down 1%. They were down 2% about 20 minutes ago. Yeah, 9 and 940. Now they're recovering most of those losses. So what I think that means for Meta is if Meta takes a plunge today, down 10%, I'm not saying it's a buy the dip. I'm just saying that if it keeps up with Google and Microsoft, it's going to recover pretty quickly once they explain why they're increasing their CapEx. It's just hilarious that the market continues to like play this game with the big tech companies and like they get the number and they act like they're shocked and then it's like knowing you have a surprise birthday party and then you get to the birthday party and you act surprised. I mean, it's like you know, it's like you know they're going to spend CapEx. You don't need to get emotional about it. But it'll be interesting to see what Zuck says about Threads, about the Ray-Bans, about AI advertising, all that stuff. And so we'll see what happens with Meta. Also, the BYD partnership today with Uber, that came out this morning. So Uber is up 2%. Uber and BYD are expanding a fleet of 100,000 vehicles in China. Uber and BYD just announced a multi-year strategic partnership designed to bring 100,000 new BYD electric vehicles onto the Uber platform across global markets starting in Europe and Latin America. So not China, but BYD is a Chinese company. So a Chinese EV is partnering with Uber to bring hundreds of thousands of new EVs into the global market, starting with Europe and Latin America. I don't necessarily know if this is like super bullish or if this even is that big of a deal. I mean, it just seems like BYD is going to increase Uber's supply side of the business, right? There's supply and demand. Supply is the cars, demand is the people that want to get rides. So you're going to have more electric vehicles. That's cool. But this is not like an autonomous platform. This is not ride hailing. This is not FSD. This is not anything like that. So I don't know if it's like the biggest deal, but it's definitely not bad for Uber. So it makes sense that Uber is up right now. Tesla is still up 5% on the day at 233.72. It certainly means Uber won't be partnering with Tesla. That is correct. It certainly means Uber will not be partnering with Tesla. PayPal might have bottomed in October, November 2023. I'm waiting for another sub 44 to buy more. PayPal, where was it in October 2023? Was that at like, I think that was at 50, right? PayPal, $50. Yeah, $50 October 20. Well, a lot of stocks actually bottomed in October. I remember October, dude. I had just come back from Vegas for my 26th birthday, and I looked at my portfolio, and I didn't look at anything the whole weekend, right? Because I was in Vegas, and I was like, why is everything so down? I was like, before I came, things were better. Like, why is everything down? And then since then, boom, we just went straight up. And then the S&P is up now almost 20% year to date. 549 up 1.32% on the day. Another name, thank you for the $5 super chat. Azure Arc now at 36,000 customers, up 90% year over year. Yeah, the Azure growth is exceptional. The GitHub pilot growth is exceptional. Microsoft Teams growth, exceptional. Cloud growth, exceptional. I mean, Microsoft had a phenomenal quarter, and it's a hard quarter because you're working off really tough comps. And I just like Satya deserves all the credit in the world. So that dip, it really felt ridiculous. Like you could justify the 390 dip by saying, oh, it got a little expensive. But at 390, Microsoft was up 6% year to date. I mean, that's not a bull rally for Microsoft. I mean, Chipotle is up more than Microsoft at that point, right? So it really did seem premature. But you needed to have some balls to buy that dip, because I'm telling you, in that moment, it felt like the world was collapsing. Everything kept going down. And then finally, we got a little bit of relief when AMD reported they beat their numbers, raised their guidance. And then Amy Hood on the earnings call, she like quelled all the concerns by investors. And then Microsoft went back to normal. But if you got the dip, then congrats. Robinhood 21,010, not bad for Hood, back in the 21 range. Again, earnings is going to be important for Robinhood. NVIDIA was named the top pick by Morgan Stanley. Correct. NVIDIA, I saw that this morning. They were named the top pick by Morgan Stanley. Not really that surprising, but a decent pick, right? But it just goes to show there's not this like mass exodus out of NVIDIA just because it fell 10% yesterday. People still believe NVIDIA, at least the banks still believe that NVIDIA is going to do what it needs to do. Dan Ives remained with his $550 price target on Microsoft. So he has not changed the $550 price target. To give an understanding of the correction or the pullback we've already had, I wouldn't say correction yet. Well, no, technically some of these stocks are down 10%. So you could call it kind of a correction. Well, yeah, more than 10%. So this is the Mag 7. Since July 10th, on average, they fell about 12%. NVIDIA lost $800 billion in market cap. Microsoft lost $554 billion. Amazon lost $259 billion. Google, $288 billion. Apple, $312 billion. Meta, $257 billion. Tesla, $164 billion. 2.6 trillion was wiped out since July 10th. So, for people saying, well, we need to wipe out another trillion, it's like, dude, we've had this is definitely not a correction in the broader market because we still haven't fallen 10% in the indices, but in the individual names, which, I mean, who are we kidding? These companies are the indices at the end of the day. We've had a pretty nasty correction. Now, you could say Microsoft had no business being at 460. Apple had no business being at 235. Meta had no business being at 530. But still, they were at those levels, and they've fallen. So I do feel like at the end of the day, we did get a bit of a correction. And now the question is going to be if the street can maintain those multiples. Is that money moving into small caps? Well, I would argue, I mean, some of it had to. Small caps are outperforming the S&P 15% over the past 2 weeks. So some of it had to move into small caps. Maybe some of it just came into cash waiting to buy the dip, but I would say a decent amount of it, not even a decent amount, like even like, 5 to 10% of it, which isn't really that much money, probably came into small caps to an extent, or not, maybe not the Russell, but small cap adjacent companies like Abercrombie, the MicroStrategy of the world, Sprout Farms, maybe some crypto assets, etc. But we definitely did see a bit of a rotation. It definitely went into regional banks, that's for sure. Regionals have performed phenomenally in the past couple of weeks. Regionals down about 1% right now, but they have done very well. AMD is up 8%. Look at NVIDIA. It's up 11.18%. NVIDIA was at 116 last week during this time. It went all the way down to 100. Now it's back at 116. Absolutely incredible. PayPal's up 4%, dude. This is like, they're buying back another $1 billion worth of stock. I mean, that's got to mean something, right? Like Alex Chris said, hey, we're going to buy back another $1 billion of our stock. Like at some point, the street has to look at it and say, okay, like if you're going to buy back $6 billion, we'll buy a couple thousand shares. Maybe that's what's happening. If the recession is possible, aren't small caps at risk? Correct. If a recession happens, small caps will get obliterated. You cannot be in small caps if we have a recession. It's just you're asking for pain in your portfolio. So that's why the existential question is, do we get a recession in the coming months? I'm on the side that says no. I just don't think we're at that point yet. And I'm open to a lot of bear arguments, but the only bear argument I've heard is that the consumer is weakening a bit. I'm like, okay, that doesn't mean we're having massive unemployment to the point where the consumer has no disposable income in order to be able to spend. And by the way, if the consumer weakens, it takes months for that to really hit the system. Unless you're arguing that the consumer has been weakening since January, which if you look at the retail's data, that is just false. Like, I don't know what numbers you're looking at that point. But if the consumer is weakening, I would expect mid-2025 is when the recession really starts to come into effect. If it does happen, but the Fed might cut rates to stop that, right? They might stimulate the economy to help the consumer with the amount of weakness they're seeing. So there are tools that the Fed has to stop a recession from happening, which is why I think Tom Lee is so bullish on small caps. Tesla 232, Uber 64, Meta 473 right now. Amit, so people bought the dip. Who is being just as responsible by selling the rip? Okay, that's an interesting question. Yeah. Who's selling? Who's taking some profits? I mean, look, PayPal, I don't think it's crazy to take some profits on PayPal. I mean, I might sell some of my options on PayPal. They're still going to be down 70%. So at this point, I'm just taking a tax loss harvest. And I don't think PayPal is going to get to $90 or $100 by the end of the year, which is what I would need them to get to like break even. So that's one that's just, it's a loss. It's whatever. But like, if PayPal goes back down to 55, it's going to suck. Right. So maybe if you got in at PayPal at 57, who's you don't have to sell, but who's thinking, hey, let me take some profits? Who's taking some money off the table? That's the question. Who's taking some money off the table at all? Farhad said, I sold some tech names, sold some options on SoFi, already sold some PayPal last time it hit 67. Makes sense. Robinhood still hasn't done the buyback. So we don't know. Robinhood could be buying back their stock right now. They might be doing it in a way that you're not going to see it in the actual numbers. Maybe we do see it. But theoretically, look, if I was Vlad, I wouldn't mind buying 5 million shares at this level. They authorized $1 billion in buybacks. 5 million shares would be $100 million, 10% of their buybacks. They can do that over the next couple of years. So I think that's decent, but we're going to find out in Q2 if they end up doing the actual buybacks. Sold 90% of the HUT position. Oh, yeah, I forgot. Nancy bought the dip on 10,000 shares on NVIDIA. I forgot. She bought it at 122, right? So technically, she's underwater on those shares. I keep forgetting, like, whenever NVIDIA falls, like, Nancy, she is, one of the signals we use to determine if things are okay. And she bought the dip. So maybe that's some signal that she thinks NVIDIA is going to be fine throughout the broader market. I'm up 13% on SoFi and debating dumping for something else. So, Elizabeth, you must have bought in the low sixes, right? On SoFi. Honestly, dude, if you got SoFi when it fell to 615 and just loaded the hell up, I mean, you've done well. Even if this thing was only at $7, you've done very well. But the fear at 615 was pretty intense, dude. Like it felt like it was going to 550. That was the next technical level of support. But if you bought some at that time, SoFi, look, it sucks. I know it sucks. I know everyone hates it. At the end of the day, I looked at the numbers again last night. The business did well. The earnings were exceptional, triple beat, GAAP profitable, revenue growth, all the good stuff. The only thing that I think the street is struggling with is giving it a SaaS multiple or a bank multiple. And I think that's a communication question. I don't think that's a numbers question anymore. And eventually, we'll see how SoFi communicates it. But if you're long on SoFi, you can't be upset at their execution. You're more so upset at the market. So then maybe it's just a question of, how SoFi is communicating themselves to the broader market. I bought SoFi $10 calls at 615, 650. Congrats. Those are good. Those are probably up a decent amount right now. The $10 call for Jan 2026, I like that as well. I do think it's cheap at this point. I do think SoFi at $10 in 2 years. If you can pay a little bit more and get the June 2026, I think that's cheap as well. Look, if SoFi's not $10 in almost 3 years, then I don't even think you can blame yourself, dude. Like, it's at this point, it's just so I think it moves beyond that, especially as small caps rally and we get a rate cut. But it is still a little bit risky right now because it might just be dead money for some time. Although I am bullish when we get the rate cut, I think SoFi does well. I don't know if it holds on to their gains, but I do think we see a gap up on SoFi, hopefully, when we get the rate cut. Someone just said in the chat, Amit, if you had $10,000, what 3 stocks would you buy? I think that's a good question to ask the entire chat. So if you had 10 grand, what 3 stocks would you buy right now? Quickly, my answer is Palantir, Robinhood, Tesla. I would do those 3. I would probably do those. And honestly, guys, that's what I kind of want. Like, based on how the end of the year goes, I want to re-architect my portfolio, and we'll see what happens at the end of the year. If things go well, then maybe we have some more money to play with. I really want to build a sizable position in Tesla. I don't have a sizable position in Tesla. The more I think about it, the more I think about Tesla, the more I think about what is the real world use case of AI. And it's not like talking to your phone and like, ChatGPT speaking to you in some other language. Maybe that's one use case. I think the real use case is FSD and robotics. Like, that's the real use case at the end of the day. So if that's the real use case for AI, now I kind of see Dan Ives' argument why it's the most undervalued AI. You can debate about the valuation or whatever, but if AI is what the market's going to buy in the next decade, you either have the chips like GPU that's going to fuel all of it, or you have the actual use case. And one of the biggest use cases is FSD. And I personally believe robotics. So not having a sizable position in Tesla, if you believe in that thesis, at least in my opinion, is something that I would want to, more seriously invest in as well. You got to pick 3. So even if you want Amazon, Meta, you got to pick 3. Rocket Lab is that? Well, I can't argue with Rocket Lab. I cannot argue with Rocket Lab. Amazon, Tesla, CleanSpark. Okay, so that's the Bitcoin exposure. If it was Bitcoin exposure, I would pick MicroStrategy though, or Coinbase, because CleanSpark, you never know about miners. You just never know how the businesses play out. They do a lot of dilution as well. So I would probably pick MSTR. CrowdStrike, Tesla, Nvidia. I don't think that's bad either. Hood, Palantir, Google. I think that's good. Robinhood, Google, Bitcoin, Amazon, Nvidia, VC, Tesla, Palantir, and PayPal. I mean, dude, if PayPal outperforms over the next 10 years, all the PayPal holders that have been taking a lot of shit from everybody, they're gonna get to brag a little bit. Okay, so here's what I mean by real use cases of AI. This is advanced ChatGPT voice mode. This came out like 2 days ago. Here's a video of some of the new innovations on ChatGPT. This is part of the thing I think Apple is going to try to commoditize with their AI as well.
Hey, I want you to act like a sports commentator commentating a soccer match. And I want you to really get into it and scream when a goal is scored and get really excited.
All right, folks, we're in the final minutes of this intense match. The home team is pushing forward, passing with precision. The striker's got the ball. He's weaving through the defense. He shoots. Goal! Goal! Absolutely unbelievable strike. The crowd goes wild as the home team takes the lead in spectacular fashion. What a moment!
Good. Now do it again, but get even more into it. Get really excited.
Okay, so we're not going to listen to the rest, but you get the point. Like, you give a prompt, and that prompt, some of you guys say it sounds horrible. It doesn't sound amazing, but that prompt then uses ChatGPT, and it architects a literal accent. It doesn't sound like the best soccer announcer ever. Usually the goal actually lasts like the goal that lasts for like 50 seconds. But the point is, like, we're seeing the advancements of AI with real world use cases. So how would I use this in the real world? If I'm in like Japan and I'm trying to speak to someone, if I could press a button and it could record what they're saying, and then it could translate it to me, and then I could say something and then it speaks it back to them in Japanese, that's a real world use case using AI. And I know that kind of exists today to an extent, but it's not as pristine as what something like ChatGPT would put out in this advanced voice mode. So that's a way I can imagine the use cases of AI on a day-to-day basis making sense. The question is, are millions and billions of people going to use that, constantly? And I don't know. I think it's a fun thing to play with, and then you move on from that. But FSD, I don't think it's something you play with. I think it's like a real thing that changes your life if it becomes real. And that is the use case of AI that I think is one of the most important things to think about more in depth. That makes no sense, Amit. It already exists. How does it? So I think there are some apps that do that, but like, what apps do that? Let me know in the chat. Because I know Google Translate does that to an extent, and yes, it does that, but it's not the fluidity of ChatGPT, and it's not the fluidity of the advanced voice mode. It does exist, but it's not like, what I'm saying? It's not like it's not the way. It's not the point where it's so natural that it's easy and that everyone starts using it as they start traveling, or at least I haven't seen that type of an uptick. I mean, I saw another video yesterday. Someone asked ChatGPT to speak in a Jamaican native accent as they were speaking to them. And like, that entire conversation was very interesting. There was just so many different dynamics to how you really saw the large language models proliferate in terms of speaking different languages, for example. But the use cases of that were stronger as well. It's not convincing. I agree. It's not very convincing. 100%. It's not the biggest use case for AI. But see, that goes to my point around Tesla. I'm like, well, if that's the use case for AI, like, there's 3 use cases. There's enterprise software. I think Palantir's a winner there. Then there's FSD and robotics. I think Tesla's like the biggest winner there. And then there's like these small remedial things that make our life better. And I don't think those small remedial things so far, this is why I think Dan Ives was not able to answer the question when he was asked an hour ago, hey, what do you think is the big, TikTok of AI for Apple on their app store? He didn't really have an answer, because maybe there's not an answer yet, but maybe that will be coming later. Jose says content creators could use it as a co-host. Imagine a co-host that every once in a while asks questions, makes jokes about you, reads the chat, and finds the best way to implement synergy with viewers and hosts. That's a hell of a use case. Yeah, that's a way better use case than my argument about like traveling and having a translator. Having like an independent AI co-host and having a synergistic relationship with them and everything you're talking about because they're hearing you all day, that is potentially an argument for a use case for AI. So I think we are at the stage of AI where we're trying to figure out what the hell is this thing used for. And in the enterprise, they're trying to figure that out. Obviously with FSD, they're trying to perfect it to make it as real as it can be. But until we seriously figure that out, we're still going to have this looming doubt, which is going to make the market skeptical a lot about AI around why are we spending so much on it. But eventually I do think we will get broader answers on what's happening and what those use cases look like. Okay, let's see what else we have going on. I'm using ChatGPT to raise my kids. I've seen a lot of people do this as well. There's a lot of different ways that you can use it with kids, especially if you're a parent. So that's another use case. Amit's job gets stolen by a rabbit device. Plot twist. See, well, one thing I'm bullish on when it comes to content creation is like it's hard to. I wouldn't say it's hard to lose your job, but your job is contingent upon your personality and your work ethic and your research and your creativity and your energy. And I mean, you guys know, for me, your humor, right? Like that goes without saying. But I don't know if an AI could be an Amit when it comes to keeping people's attention and just like making a daily show and all that stuff. Maybe it gets that good one day. And if it does, it's like, all right, bro, I guess this thing is really taking everybody's job. But one of the reasons I'm bullish on content is because content, to an extent, you are monopolizing yourself. And if you monopolize yourself, it's very hard to get fired or get replaced, because at the end of the day, AI is just not that good enough yet to replace it. Yet. We'll see if it actually gets there. There will be YouTube channels hosted by AI hosts. Yeah, we already have some of those, but they're just not that good. That's the problem. You can't lose your job when you're already unemployed. Yes, that's the that's the smart man meme. You can't lose your job when you're already unemployed. Okay, let's get an update on big tech. Let's take a look at that real quick. Let me pull this up. This is going to preview Meta and Amazon. That we have Meta today, Amazon tomorrow. And then we'll keep going from there. And then I'm going to talk about some of the things I want to see from Meta and Amazon.
order to look forward, I look back at last week in Alphabet and the lessons learned, the questions that investors posed. And we've already talked about it in the show, but I think it's a question about for every dollar you put into AI infrastructure investment, how many dollars are you getting out in the near term for AI? Is that how you'd approach this week?
Yeah, I think that's going to be a key topic. We're not going to get a ton like out of Meta or Amazon, for example, in terms of what they're spending this year. People already generally kind of understand that. I think we're going to be looking at the marginal dollars, like you said. And I think what's interesting is, I think a quarter or two ago, people were very focused on specifically what AI was driving. But I think what we're learning more and more is that AI is really sort of integrating into these models. And so you can't unpack it, which is okay, because then we actually can evaluate the dollar growth in these companies and what is sort of justifying those CapEx investments.
There are things that are sort of idiosyncratic. In Meta's case, we kind of forget it's a massive portfolio of social media companies, but they last quarter told us about their plans for infrastructure. Which wins out, the forward-looking AI story or the backward-looking history of that company?
Oh, I think people are definitely going to be looking forward, right? The story will be the same. We'll look at the revenue trends and evaluate kind of what they're saying about the ad market and their products in particular. And then the focus on the call is going to shift to Mark talking about his vision for AI and trying to give people some comfort, I think, this quarter in again, why are they making such big investments where maybe we're going to see, maybe a little bit of sort of call it delayed gratification in terms of when we see those investments pay off, right? He used the word last quarter, multi-year investment cycle. That's a scary term for people. So we'll see what kind of performance he puts up on the call later this week.
For me, Brad, this is a week where being a CEO or a CFO, you kind of got to earn that pay packet. Do you know what I mean? That it comes down to communication at the end of the day. I found last quarter fascinating. How much kind of faith or credence do you put into the words spoken by the people at the top?
Yeah, I think they're a little bit different cases, right? We cover Meta and Amazon, so maybe I'll stick with my commentary there. In terms of Mark Zuckerberg and Meta, I think one of the adages we've heard lately is you want to buy Mark when he's feeling maybe a little bit more confident, and sell him when he's feeling buy him when he's feeling a little bit less confident, sell him when he's a little bit more confident. Last quarter, I think they're delivering such high growth. They were 27% growth last quarter, 22% this quarter. I think that felt a little bit tough, and obviously the stock sold off. Historically, I think you've seen that flip to the other side. So we'll see what kind of tone we get out of him here. But if he's basically talking to maybe more moderating growth rates and feeling a little bit better about those investments, that can be a positive sign.
I agree with that as well. Again, we had the sell-off last time when Meta had some harder comps and the CapEx increased. Maybe that sell-off is now not going to happen again if they have the same results, but they beat their top-line numbers. But given Microsoft and Google, yeah, I mean, if you were going to predict, you would predict that the market would get emotional and sell off as they increase CapEx. Again, Microsoft increased 50% year over year their CapEx and 33% quarter over quarter. So gigantic increase. If Meta is increased anywhere near those levels, maybe that same volatility happens as soon as the numbers come out. Lisa Su on CNBC today talking about AMD. Let's get her thoughts on the earnings.
Reporting a super strong quarter. Sending shares much higher. Of course, when it was first announced, the stock was actually down. A lot of this is around AI adoption. We're also going to have the PC. CEO Lisa Su joins us now, first on CNBC, to discuss the quarter. Hey, Lisa, it's great to see you.
Hey, good morning. It's great to see you guys.
Okay, so Lisa, on page 5 of your conference call, using the fact set, you say something that I think was kind of jaw-dropping. I don't know if people understood that. You said, as a result, we now expect data center GPU, data center, Dave, that's important, okay? That's the AI there. Revenue to exceed $4.5 billion, up from $4 billion that you guided in April. You just guided up $500 million in one quarter?
Well, first of all, we had a very strong second quarter. Very excited about the traction that we're seeing. It is all about AI. You know, I know that you guys were talking about AI in the earlier segment. There's no question that AI is like the biggest technology advance over the last 50 years, and we're very excited to be helping power that foundation. So yes, we were able to had a very strong data center quarter. We more than doubled our data center revenue in the second quarter, and we see strong growth into the second half of the year. So part of that is, acceleration in our AI growth, and that's what allowed us to increase our guidance from greater than 4 billion, 90 days ago to greater than 4.5 billion for the year.
Extraordinary guide up. Now, one of the things that has bothered people ever since the Alphabet call was the notion of like, well, we better build it because they might come, and if not, we're going to fall behind. When I listen to your call and I listen to you, I feel it's the opposite. I think customers are desperate for compute power, whether it be from you or NVIDIA. They got to have it, which, of course, you're taking share when it comes to some parts. Is it not true that the real issue is can you meet compute demand?
It is absolutely true that compute is really the foundation for what unlocks all of this, AI capability. It is true that the supply chain is very tight right now, and frankly, people need more compute. We're in a very, very strong position in the sense that we're continuing to ramp up our MI300, which is our AI compute chip. But we also see actually, broader demand trends that say even in traditional compute that had taken a little bit of a slower start for the year has actually now seen some very positive signals. So we see that on the traditional data center CPU side as well. So overall, when I talk to CEOs and CIOs across the enterprise, I think this is an opportunity to invest. It's an opportunity to invest to really capture, all of the capability of, AI, and it's also an opportunity to refresh, data centers that have been aging for some time. So these are some of the trends that we're excited about going into the second half.
So, Lisa, maybe because you're a plain-spoken person like my friend David Faber, both from Queens, I might add. Can you please explain to people that even though AI is not necessarily curing cancer or putting a man on Jupiter right now, it is integral to many of the organizations that you deal with and talk to every day?
Absolutely. First of all, it's great to see, David and Carl as well. When I look at AI, I really look at AI as trying to really help every enterprise, every company, every sector really become more productive. And we see it in many different ways, from simple things. You'll hear people talk about call centers and customer response, and I call those, very low-hanging fruit, to much more complex things like, designing better chips. That's something that, we do and our semiconductor peers do, or designing better factories, or actually even helping discover the next big drug discoveries and, the healthcare things that you mentioned. I do think this is a long-term arc. So people are always expecting, things that happen overnight. This won't happen overnight. But the time to invest is now, so that we see the payoff in the 1, 2, 3, 4, 5 year time frame. And that's what companies are doing, because we see the huge potential for using AI in all of our businesses.
Lisa, it is David. Back to the M1300 and the guide to $4.5 billion that Jim pointed out that I think is being embraced by investors. I've had a couple this morning actually ask why it isn't even higher. Given if you annualize the quarter and you add in a growth rate, it would seemingly get you perhaps as high as $5 billion. Are you being conservative?
Well, David, the way we look at these things is, we call it like it is today. And what we see is it was very important when we started the year to pass some important customer milestones. We have some great partnerships out there. We've talked about Microsoft being a very strong partner for us across the data center and especially in AI. We've talked about Meta. We've talked about Oracle. We've talked about a lot of the OEM partners as well that have adopted MI300, and we wanted to go through some of the key milestones. So the fact that we're sitting here at the middle of the year and calling over 4.5 billion for the full year, I think is a great place to be, thinking about just where we are in this trajectory, and we'll continue to call it like it is as we see every quarter.
This came up, something about a high bandwidth memory problem that had you losing some yield. It was not you, it was related to a supplier. Was that an issue that's been resolved, or is there anything you can comment on or clarify?
You know, David, I would say that there's a lot of noise in the system, and I would really not pay attention to those kinds of things. These are extremely complex products. I mean, MI300 is like over 150 billion transistors. Of course, we're always working things real time, but as far as, you know, we look at this is a very, very successful production ramp. We're very excited. We're seeing MI300 now in our customers' data centers in volume, running production traffic, giving great results. And that's what gives us the confidence for the growth trajectory in the second half of the year.
Lisa's crushing it, folks. Lisa absolutely crushed it. And her stock is reflecting that right now. So AMD up about 7%. SoFi 750 breaking out a little bit right here. Robin at 2105. PayPal up 4%. PayPal's about to go to 67. So PayPal is doing its thing. I guess maybe this earnings potentially is an inflection point. NVIDIA up almost 11%, 114.67. Match Group up 12%. CrowdStrike 235, Palantir 2715, Apple 223, Boeing 189, and then Tesla 231 up 3.9%. There you go. There you go. There you go. A decent earnings already in the morning and a decent earnings last night, even though Microsoft made everyone a bit scared. Jose says once AI revenue gets to 10 billion, she unlocks a leather jacket. Yes, exactly. That's dude. It'll be so cool one day if she wears a leather jacket. That's gonna be fun. That's gonna be so cool. Microsoft at 14 down 1.12%. All right, so look at Qualcomm, dude. Qualcomm's up 5%. They have earnings after hours as well. AMD up 7%. I guess now we wait till JPOW speaks. JPOW will speak in a few hours at 2:30. I'll be live at 2:25. 2 p.m. We'll get the decision. I'll tweet it out at 2 p.m. If we cut, pause, or increase. I will eat a tub of mayo if we increase. So that is what we have on the line. But I don't think we're gonna increase. I think we'll pause. If we cut, dude, if we cut, now it's not going to happen, but if it were to happen, that would be kind of crazy. Probably not going to happen, but I'll be live at 2:25, and then at 2:30, we'll listen to every syllable JPOW has to say. And hopefully he says good things. JD, thank you for the $5 super chat. How's it going? Stay cool. It's going well. Thank you for being here. Thank you all for being here today as well. Did you buy the mayo already? No, dude. I'm shooting the shot without looking if it's going in, because I know there's no freaking way in hell JPOW raises rates and I actually have to eat the mayo. So if he does, I'll buy the mayo, live on stream. But I didn't need to buy the mayo because I know I'm not gonna have to eat it because I'm confident JPOW's not gonna raise rates. If somehow I will have to eat it too. Like I can't not eat the mayo because it would just be disingenuous. I think your relationship with me we would have trust issues if I didn't eat the mayo, if he actually raised it. So I'm going to do it, dude. If I'm going to do it, if he raises, I just know there's no fucking way I'm going to have to do it. So, you guys, I think this is a metaphor on the philosophy of life, which is play the game you can win. Play the game you can win. Now, sometimes you got to play a game where you have a low chance of winning, but the upside is very high, so you still play because if you work hard, maybe you can win. But in general, you want to play games that you can win at and excel at, because you can obviously be the most productive in them. Now, as you're growing up, you have to take risks and play games that you're not the best at. I did that with music and basketball. I wasn't the best at those things, but then you find the game you're good at, like debate, and then you use those skills to play games that compound on those skills from a game that you realize you were good at. So I think I'm good so far at the game of predicting if JPOW is going to cut, raise, or pause, not because I'm some amazing macroeconomist, but because he hasn't raised in 12 months. So he's not going to do it again, I hope. And so that's why I'm playing this game. Word of the day is broom.
Broom.
Mist or fog. She loved the way the broom settled over the fields. The lighthouse's beams cut through the broom, guiding ships safely to shore. This is a boring word. Let's do another one. This is a boring word. Let's do a different one. Let's see. What else do we have? Word of the day. Let's do a different one. This one's less boring, but we all kind of know it. This one is impeccable.
Impeccable.
Basically, you have to be perfect. So Microsoft needed to be impeccable yesterday. Unfortunately, they weren't slightly, and that's why the street hurt them. But it seems like they recovered most of their losses. All right, that's what we got. If you can see how bad I'm dying thinking about the one chance it happens, dude, could you imagine he fucking says, yeah, we're raising rates, guys. Inflation's sticky. The ISM services data came out. It's a little too sticky. The jolts, we have 200,000 jobs. We have too many jobs. We need to fucking increase the rates to, like, dude. Already, guys, drinking this peanut butter banana protein smoothie. Like, this is already, like, this is not good. This, like, I handle it, I drink it, and I'm trying to stop being a little girl and drink caramel latte, so I'm trying to move on with my life, but it's not like I enjoy this. This is not like, oh, it's time to wake up and do the show. I have my great smoothie. But when I had my latte before I start the show, it's just a little bit of pep in your step. This thing is just, I'm drinking it to drink it. But it's not the most exciting. Anyway, 2:30, I'll be back. We'll see what happens. I'm about to go to the gym, get a workout in, get all my sweating done before we cover JPOW. And hopefully he doesn't continue to make me sweat. And we'll see what happens from there. All right. Thank you, everybody. I'll see you guys at 2:30 p.m. and we'll see what JPOW says. Bye, everyone. See you in a bit.